in partnership with CommSec.
Joining us from CommSec is Tom Piotrowski. Tom, good morning. Oil is on a bit of a tear in the last 24 hours or so. Why is it surging?
It's a good point that you make, Kenny. So oil prices are at their highest levels in around 4 months, and it turns around the most recent sanctions that are being applied by the Biden administration in relation to Russia. It was quite unexpected. It has now cast a pall over supply prospects in the near term. And in addition to that, there are suggestions that when Mr. Trump ascends to power, that there will be new sanctions in relation to Iran as well. So in combination, those two factors have seen a rather acute adjustment higher for oil prices in the last couple of days. So currently, as I said, we've got them up by the better part of 3% at a 4-month high. And that is one of the bright spots in Northern Hemisphere trade. So energy stocks in the US continuing to do well. They were the reason that our market was able to acquit itself better under the circumstances of aggressive selling yesterday. So that's one thing to look out for today. But in broad terms, we have seen equity markets in the Northern Hemisphere remain under pressure last night. But it wasn't the same push lower that we saw on Friday following those stronger US employment figures. There was a consolidation, and we've seen Wall Street retreat off the worst levels of the day. So to that end, we've got the Dow Jones up by 0.7%, having been down by 0.25%, and having been down by around 1% at its worst levels of the day. The S&P 500 is down by only 0.1%. So some sort of an equilibrium has been established between stock prices and those rising interest rates. It's just a question of whether or not we can navigate the rest of the week in that fashion, because we've got some important inflation numbers to navigate in the US producer and consumer inflation over the course of the coming days. So having said all of that, Kenny, we can anticipate an encouraging start to trade locally today. The futures are pointing to an improvement of around 0.25%. So essentially a continuation of that recovery from the worst levels of trade yesterday.
Okay, Tom, see you soon.